Testing.
We are just seconds away from October producer price data, retail sales, and new manufacturing numbers from New York State. And the futures continue to be sharply higher. So we had retail sort of inflation yesterday, consumer prices, and we're going to get wholesale now from Rick Santelli, who's at the CME in Chicago. Rick, the numbers, please.
Yes, on the PPI for the month of October, expecting up 1/10. Buckle up, down 0.5%, down 0.5%. That is a huge drop. You have to go way back to April of 2020 to find a smaller month-over-month change, and that one happened to have been minus 1.2. And if we look at what is going on with regard to ex-food and energy, unchanged, also significantly lower than up 0.3. Ex-food energy and trade up 1/10, half what we were expecting. Year-over-year numbers now. Final demand 1.3, a huge drop from 2.2. 1.3. That is the lowest level going back to July when it was 1.1. And if we look at 2.4, if you subtract food and energy, that's 0.3 less than we were looking for. You'd have to go back all the way to January of 2021 to find a lower number. And finally, ex-food, energy, and trade, 2.9. That is the only metric that's higher than we were expecting. We're expecting 2.8, and 2.8 was in the rearview mirror. We had several 2.9s. We had them in July and August. So food, energy, and trade is a little stickier than expected. All the other numbers are cooler than expected. Let's look at Empire, shall we? Empire expected down 3 is now 9.1. 9.1, that's the best level going back to 10.8, which was April. Now retail sales for October down 0.1%. We were expecting a down number. That's less than the down 0.3% we were looking for. And we made it up in the revision from up 0.7 to up 0.9. If you strip out autos, it's up 1/10. So we could see that autos, of course, affected the equation a bit, and stripping them out turns it up 0.2 into a positive 1/10. Rear view mirror, 0.2 of a revision from up 6 to up 0.8. Strip out autos and gas sales, also up 1/10. The control group is up 0.2, exactly as expected. That follows a revision from 0.6 to 0.7. What's notable here is all the revisions for September were positive revisions. We see that interest rates aren't moving much. As a matter of fact, we are now a couple of 30 seconds higher. We look at
Good morning, Dot Trader. Can you hear me well?
446 on the cash market, 487 on Tuesday. We're at 484. So what's going on? Well, I think that part of this is yesterday we probably had a bit of an overreaction to CPI. understandable. Not only in the U.S., in the U.K. they had a better than expected number. And how over their skis did they get? Get this, Joe. They auctioned off 7 billion pounds of 20-year notes. They received 93 billion pounds worth of bids. 13 times more bids than the minimum
What the
security
heck
for
is up
sale.
with
That is
this
unreal,
crazy
and it
bull
really
run
does
for me to
underscore
make
that
me
central banks
realize?
were very
Yeah, it's wild, man. This
and
this run has just been disgusting, but we're
folks
pretty
trade
much, I
slow
believe we're
move
pretty
was
much at the top.
target.
So now it's just a matter of waiting to get
Like CPI.
some retracements and possibly a market structure break.
More attention again to supply or to term premiums. They didn't go away. We've just changed our focus. You always trade the market ahead of you, but that certainly doesn't mean that there aren't issues ahead, especially issues when you think about how governments around the world are trying to control more of their economies. That should affect productivity, but at least for the moment, inflation seems to have struck a chord not only with our central bankers, but also investors, interpreting those as very positive signs. Joe, back to you.
All right, Rick. Very good. Let's get to Steve Eastman. He joins us now with more. We're seeing, Steve, kind of a muted reaction, and we get it all yesterday from the CPI, which makes this, was this not surprising? Still seemed like some of those numbers were surprising.
I think so, Joe. I think we got a lot of reaction yesterday, but I'm actually a little more excited about this number, in part because there are pieces of this PPI that feed into the Fed's PCE, which is their preferred indicator. So to the extent that some of those indicators inside it were low, it's also going to help the Fed believe in the decline in inflation. We've seen times when it's gone the other way. In fact, the PPI report has garnered a lot more attention these days because of what feeds into the Fed's preferred inflation indicator. And so these are good numbers. I point out that a big part of the decline here was the trade component, which is a profit component. They try to, a margin component, they try to estimate from wholesalers. So that's a piece that feeds into it in terms of what's going on with the Fed's PCE. On retail, it's a good question now whether or not we've taken a break here after that strong number we had in September. I was surprised it was not revised lower. Or is this just the beginning of the slowdown that we've waited for from the consumer? Are they taking a break before the holidays, or does this augur poorly for the holidays? We're just going to have to watch that, watch the high frequency data and other data we have. But, you know, in terms of components, furniture was down 2%. Autos were down 1%. We'll just have to wait and see whether or not it's the beginning of something or just a break they've taken from a strong series of spending. Joe?
Quite a bit about
Not much. Seeing that, okay, we're getting a little reversal.
That, if you were shocked, if you have sticker shock from the
and ES
9%, things still when price went up 9%, they're still there, except they're a little bit higher than 9% because there's been 6, 5, 4, 3. There's been all those additional smaller increases. That's what we forget. So I mean, I'm still shocked whenever I go to the supermarket. I'm still shocked at a lot of and they're there to stay, and we're never going to deflate, are we ever?
I'm shocked at how little they appear to be paying you, Joe, that you're shocked by what you see in the shopping market at the grocery store.
But tell me about it. I've been dealing with that for 30 years. How little it, but.
I'm going to give Casey a call after this discussion.
Thank you.
But listen, let me. No, I think you got a pretty good age, Joe. Let me tell you what the debate is here, okay? If you want people to feel better, what you would attack is the price level, not the rate of change. You'd want to go back to where you were. I don't know how far back to when my dad told me he would get a pastrami sandwich and take the subway for a nickel. Remember, he used to tell you that. But if you want policy, the Fed is aiming to change the rate. They're looking for 2% inflation. The problem is, why don't you attack the price level? Because if you bring down prices, you probably also bring down wages. Wages will go down with prices. So you got to be careful what you wish for. If you want to go back to the old times, say the pre-pandemic era, you could bring the price level down, but you're probably also going to bring the wage level down.
Let this be the
It just
top,
happened so
man.
quick and it's kind of out of the blue that we're a couple of years ago, and we're all still, seeing what things cost versus what they cost 3 years ago, for example. All right, Steve.
Right.
Thanks. Programming note.
Joe, what do you want? Joe, you want 30? You want 30 an hour? 35 an hour? What is it that you're after?
I want what those union guys were asking for. I want a 40% increase.
That's a good deal.
And a 4-day work week.
That's what I asked.
Casey for. He was close. He was close. He said, "You're so valuable, I could almost."
I'm giving him a call on your behalf, Joe.
And he said, "No."
Gotta go.
All right.
If we can break below yesterday's low, so if we can get below
on the exchange at 1:30.
15.14
Coming up, we'll take you live to San
and
Francisco.
wind
where a little bit later,
a wind
President Biden
down
is
to
scheduled to meet Chinese President Xi
44.72 would be
Jinping. And we'll get
beautiful.
commentary from former U.S. Trade Representative and current Council on Foreign Relations President Michael Furman. Stay tuned. You're watching Squawk Box on CNBC.
Mm-hmm. Adds up. Yep. Yeah, we just had news at 8:30 we had a PPI which didn't go too well. Yes.
Welcome back to Squawk Box, the diplomatic event.
me
Much of the
mark
world to be
this
watching
off.
today. It's that meeting in San
If we
Francisco
break
between President Biden and Chinese President
below
Xi Jinping. Jarvis joins us now with more on all of it. Good morning.
Yeah, good morning, Andrew. President Biden landed in San Francisco late yesterday to be greeted by local officials and head off to a Democratic Party fundraiser last night here in San Fran. Chinese President Xi Jinping landed shortly after that, greeted by Treasury Secretary Janet Yellen, California Governor Gavin Newsom, and a military honor guard. One thing that's still a mystery, though, at least officially, is where this meeting will actually take place. The administration is only saying it's going to happen
And I
in
thought
the San
about
Francisco
taking
Bay
this at
area and not offering
45,
public
30,
details
38.
other than that for security reasons. Before his departure yesterday, though,
And we
President
have
Biden was asked what a
ES.
successful meeting would look like, and here's how he described it.
Get back on a normal course, corresponding, being able to pick up the phone and talk to one another if there's a crisis, being able to make sure our military still have contact with one another. We can't take, as I told you, we're not trying to decouple from China. What we're trying to do is change the relationship for the better.
Now, all that is in keeping with the relatively low expectations that officials are setting
I'm
around this
taking it
meeting.
short on the
Although
Dow.
some of the outcomes have likely been agreed to already, the key one you heard from Biden there is reestablishing those military-to-military communications, which could help prevent an accidental confrontation in the region. President Biden would also like China to agree to measures limiting the flow of fentanyl to the U.S. And on the Chinese side, this is an opportunity for China to reset global market expectations about the direction of its economy. One way they'll do that is with a $2,000 a plate dinner tonight with what is expected to be a glittering array of American CEOs here in San Francisco, a chance for Beijing to remind Washington and the world that it has powerful friends here in America. We've already seen some agreements nailed down as part of this overall process. The administration announced last night, guys, that U.S. climate envoy John Kerry and his counterpart agreed to a set of climate measures, including relaunching bilateral climate talks. So some progress already, and we'll wait to see what the rest of the day brings. Guys, back over to you.
Okay, Eamon will be watching all of it, and I'm sure talking to you about it all as well. Thanks.
You bet. What's that?
What are you laughing
What are you laughing
We
at?
got a lot of stuff happening in the world, so we got that going for us. John Kerry's
Climate.
some type of. We're going to meet more to talk about things.
Okay, unwind. Yes, yes.
Let's talk more about the meeting today between President Biden and Chinese President Xi. Let's welcome Council on Foreign Relations President Michael Froman. He served as U.S. Trade Representative in the Obama administration. Mr. Ambassador, I think that you say even a leadership statement is gonna
1 hour
be
bearish engulfing
hard
candle
enough to
on
get something
ES.
everyone agree on. If we can't do that, does anything really substantive happen?
This is looking good for any
Although we
pop
did send
that it
people over
does
to try and
at
get
the
talks about
9:30 open for
military,
sure.
to get talking again. That did not happen. If we did accomplish that, that would be enough, wouldn't it?
Well, yes, I mean, there are really three things going on in San Francisco. There's the APEC leaders meeting itself, which is 21 economies, and that really just sort of moves ahead issues like inclusive growth, sustainability, cooperation, integration, and those will be modest steps forward. There's the Xi summit that you were just talking about, where I think actually they're coming out with some decent, modest deliverables. The goal is really to stabilize the relationship going into 2024, when you've got elections in Taiwan, elections here, of course, and where China is likely to play, the issue of China is likely to play a big issue. So I think both leaders, both countries have a strong incentive to get done what they can get done, but most importantly, to send a signal that they want a stable relationship going into 2024.
You think, Ambassador, that we're in a stronger position because of at the expense of China with the economic problems that are so well documented that President Xi and China is having at this point? Are we do we have high ground?
Well, I agree with that, Joe. I think a year ago, the common refrain coming out of Beijing was the U.S. is in inevitable decline, China is on the rise. Now here, a recession, while it still is possible, seems to be receding on the horizon. And in China, they've got much slower growth, high youth unemployment, and many of the tools that they would use to get out of this situation, like investing in property or investing in infrastructure, aren't really available to them anymore. They've sort of used that tool up, and in fact, that's become part of the problem. So I think the U.S. goes into these meetings in a relatively strong position, given our economic performance vis-a-vis China.
So foreign investment is near and dear to President Xi, and more important than ever. Does that mean that some of these things, that worst case scenarios that we read about all the time in the press for why we should fear China, are those put on the back burner in China because they need foreign investment? They need the United States at this point. Can we add 5 years to when Taiwan goes, or whatever the things we're worried about? I mean, they're still building a military base near Cuba. They're still buying up land, still sending spy balloons. Is any of that going to change?
Well, I don't think we can afford to be complacent about it. I think they're still engaged in a very significant military buildup, significant nuclear weapons buildup as well, and they're exerting themselves around the world. Doesn't mean that they don't have domestic issues that they have to deal with, but I certainly wouldn't underestimate their capacity to deal with them. On the foreign investment, it'll be interesting to see, because on one hand, President Xi has been sending a very strong message of wanting foreign companies, including U.S. companies, to come back to China, invest. He wants U.S. CEOs to come back. On the other hand, in how they've implemented some of their new anti-espionage laws or their data laws, they're detaining foreign executives. They are raiding offices of U.S. and European firms, and that's sending a chilling effect to the investment community precisely at a time when they would like to attract it.
Ambassador Furman, how directly do you think the president can say,
Yeah. Yep.
you know, we want you to put pressure on Iran. We want you to put pressure on Russia. I mean, how can that conversation happen as a function of these other issues, which maybe we have leverage with, or maybe we don't?
I think that those conversations can happen.
Yeah, I'm trying
sure
to.
that they will
I
happen.
focus
The
more
question
on
is
like
whether China's
extensions
right
and
now,
curls
whether
and
China
kickbacks, because
is enjoying the fact that
my
we're
knee
sort of
been
tied
bothering
down
me
in
quite a bit.
Ukraine,
So
we're tied down in the Middle East.
yeah,
It's a good distraction from what was going on a year or so ago when we were all talking about Taiwan. And so I think from China's perspective, whether it's through Russia or whether it's through Iran through its proxies, Hamas and Hezbollah, that the U.S. is sort of being pinned down and being brought back into the Middle East and Europe precisely at a time when it had hoped to complete the pivot or the rebalance to Asia.
yeah,
So it doesn't sound like the U.S. does have leverage. I mean, I'm just trying to understand, you know, in terms of the interplay between these issues. Is there one, or do they happen discreetly? Because on one hand, you've got all these U.S. CEOs paying $2,000 a plate to have dinner with President Xi, and on the other hand, you know, China's, you know, we're relying on the fact that China needs foreign direct investment. I mean, it's sort of, it's very muddled here.
I would not overstate our leverage over China's decision. China has been remarkably disciplined in pursuing its self-interest narrowly defined. And I think the onus is on us and the rest of the world to demonstrate to China that reestablishing peace in Europe and in the Middle East is in its interest, and not that we're going to have leverage in such a way to force them to do something that they would otherwise see as being very much in their short or medium-term interests.
I mean, I would think that even long term,
yeah,
two
not
superpowers
both.
is a pretty good world because you
I do
sell to
both.
each other and you know, you manufacture
Even
things,
MNQ, even MNQ, I trade them both. Like when I'm not too sure about the movement, I'll scale in with the micros, and then once I get confirmation, I'll add the minis.
Mr. Ambassador, do they want to take over, and do they want to basically have us more subservient to China?
I don't think, unlike the Cold War, the Soviet Union, I don't think China hopes to export its ideology or its system to other countries. I think it wants to make sure it has access to everything it needs anywhere in the world to succeed in its own domestic agenda. So that's why it's investing all over the world to get access to commodities, to the basic inputs.
MYM,
has a real problem
YM,
in terms of food security.
NG,
it's using all of its tools at its disposal,
GZ.
like the Belt and Road Initiative, to try and bring other countries closer to it. And so I think it's a bit more, they would love just to be left alone by the U.S. to go out and do whatever they need to do to support the kind of growth that
you think it's altruistic? They want to bring their billions of people into the modern world, or is it they need to do that for the CCP to stay in power?
I think the legitimacy of the CCP up to this point has been dependent on being able to deliver that kind of high economic growth and raising people out of poverty, bringing people from the countryside into the cities, and creating a real middle class life for hundreds of millions of Chinese. They've been quite successful in doing it. It's now plateaued, and they need to think through what their next stage is.
Okay, very good. Will be obviously be a lot of coverage of what's happening on San Francisco Day. Thank you for your time today, Ambassador.
Thank you.
Okay, coming up, what to watch in the markets when the opening bell rings. The futures. Take a look right now. It's green across the board. 90 points on the Dow. Nasdaq up 88 points. S&P 500 up close to 15 points. We're coming right back.
Street joining us now in yesterday's market rally. And what's ahead for investors is Paul Zemsky, Chief Investment Officer, founder of the Multi-Asset Strategies and Solutions team at Voya Investment Management. Paul, great to have you with us. We pulled back a little bit from pre-market session highs in terms of the futures on the back of the PPI data, the weaker than expected retail sales. What do you make of the markets here? Because it does seem like, the 10-year yield ticked a little higher on the back of that data, and we lost some of our altitude.
Yeah, I think overall the data has been really, really good for the market, right? So it turns out inflation may actually be transitory after all, and that's what markets really should be focusing on. The inflation data has been great, better than I think anyone forecast. That basically means the Fed is done, and the risk that the Fed over tightens and causes a recession is off the table. So yeah, a little pullback this morning because retail sales were a little bit stronger than people were expecting, but clearly slowing from the burning third quarter. Inflation's great. Earnings troughed in the first quarter of this year. So yeah, after such a run up, having a tiny pullback in the 10-year or having rates pop a little bit is, I think, expected, but we've seen the high in rates.
If we've seen the high in rates and you think that we've basically got a soft landing and the Fed's out of the way at this point, which sectors are a green light in your view? I mean, we saw the regionals in yesterday's session jump by about 7%. And I'm wondering if that, their assets, their books look better when rates go down. And here we are. That's exactly what we saw in yesterday's session. Bank of America was a huge beneficiary yesterday because of that move in rates. Do you see the pathway to be invested in financials?
Yeah, so financials, tech, all the stocks that are interest rate sensitive, growth stocks, all should be doing better. Long duration assets. You look at banks and other financial service companies that have books that would be, or loan books that would be severely hurt if there was a recession. Take that risk off the table. All those stocks look better, no question about it.
Semiconductors, new record high in terms of the SMH ETF in yesterday's session. Are you a believer? Do you take a look at those multiples and think, you know what, in this kind of market, when everything's going to rise, why should I pay such an above market multiple for this group?
I think you should be. Fair question. I think you should have some. The AI revolution is real. It's not my particular area of expertise, but the AI revolution is real. I use ChatGPT 4 every day in my work, personally and professionally. It's created a positive supply shock, positive demand shock for chips of all kinds. And one thing we have at Voya we talk about is don't be short innovation. So it's not just the big GPU chip makers, but the chip makers that are also supplying all the nuts and bolts to build these machines are all having positive demand shocks, and that's going to help margins. So, yes, they're expensive, but it's not unwarranted in my opinion.
Paul, great to speak with you. Thanks. Paul Zemsky, Voya.
Andrew, can you put in ChatGPT questions I should ask Nikki Hill? I mean, will it come up with? Could we do that? Would we not have to think at all anymore?
And then we can just get somebody else to read them. Why would we have to pay you?
That's the problem.
40% raise and a 4-day work?
Yeah, that's the problem.
We'll just get somebody who's willing to work for a quarter of what.
What's the first one?
Yeah.
What's the top one?
Hold on. 1 second.
We may need to revisit this.
It may not.
Make sure you join us tomorrow. Thank you.
Come on.
I'll be back. You'll be back. Make sure you just walk on the street, isn't it?
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, and
Let's
Post 9 of the New York
go.
Stock Exchange. Bulls looking to add to Tuesday's monster rally as
Who the
PPI
hell they got or not? Like, they ain't tired of all this volume.
Cues down 0.5, biggest monthly drop in 3.5 years. Retail sales soften up a bit as well. 10-year goes to 4.42 today. Our roadmap begins with Target, though, smashing expectations. Shares are surging ahead of the open, even as shoppers pull back a bit.
Plus, rally mode, the S&P and NASDAQ notched what was the best day they've had since April. The Magnificent Seven stocks adding more than $200 billion to their market caps over just one day. And it may be that we have more gains on tap today. Stay tuned. President Biden is set to meet Chinese Xi Jinping just a few hours from now. First, one question how China's economic slowdown factors into today's store.
Let's get to Target, surging on this Q3 earnings beat. Holiday quarter profit guidance largely above consensus. Company cites some lower inventory levels and supply chain costs. Comps did fall 4.9 on weakness in discretionary. That's the biggest drop in comps since 2009. Here's Brian Cornell.
Let's take a look at Tesla.
While we're happy to see inflation rates moderating this year, if you compare industry pricing in key categories back to 2020, food at home pricing for families has increased 25% overall, and in some areas up to 30%. If you're a parent raising a baby, you're facing increases of more than 30% on baby food and formula too. And that's in addition to persistent increases in a variety of other categories. So when you layer on the impact of higher energy
Video with
prices,
the
it all puts pressure
from
on discretionary
500.
Jim, you're going to have a lot of time to chat with him tonight.
Yeah, and I think that Brian delivered the kind
Yeah,
of
we should see a decent retracement based on how I'm seeing the stocks are looking.
going into Christmas. He's got a
A
right
and
inventory
B,
better. And a lot of it is, by the way, is
double top,
private
lower
brands which are
high,
selling like mad. I think that in the same way that you go to Costco, you buy the
Netflix,
signature, which is actually premium
Amazon.
private label. He has premium private label. He's got about
Yeah.
close to $30 billion worth of those. Now, look, I mean, he did make the point. I think it's really important that we're not back to where we were in 2019. A lot of people keep thinking, well, inflation's under control. What Brian's talking about is, David, there's just a huge amount of money going to things that make it so you don't spend a lot of money at Target. And that's one of the reasons why you have to have inexpensive products to
Right. Do you think this starts a new trend for this company or a new positive one? Because they have gone through so much over these last, let's call it.
Alright, so a nice bearish engulfing candle on ES on the 1 hour time frame. So I'm going to be watching for a pop that holds below 45.28.
about all the things that are working to make shrink to be much less a piece of the puzzle that was so negative. Of course, he never gave in to the idea that the cashier should be law enforcement, and that was one of the reasons why I think you remember he runs a very tight ship in terms of having say good attitude, because it sounds almost like Pollyannish, but he was always protective of his workers, which then hurt him the most, I felt, for shrink. But I will point out, David, he's got this strategy of doing partnerships. Right now, it's the Starbucks strategy that is crushing it. Just crushing it. He's made it so that there's Starbucks, you pull up and you can get a Starbucks. I know that Luxman Narasimhan spoke to me too about how important this is. He's got a great strategy with Ulta, which, by the way, Elf is now one of the biggest sellers because Ulta sells that. And the CVS is working for him better than it is for CVS. So I think there's a lot here that I like. I think that is it a new one? Well, it's back to where stock is incredibly cheap. Yeah, I'm going to compare this, by the way, compared to TJX. And my chapter talks on TJX. It's been one of the biggest winners, but it always goes down when it reports.
You said people are sick of these two names going higher. That's what you tweeted this morning.
There's sickness. There's like ennui. There's ennui. There's Magnificent Seven ennui, which it added the value of what Luxembourg. I mean, who had such it added this and added that? I mean, like, it added the value of GDP of California. I mean, who cares?
By the way, that $200 billion sounds way
I
low.
thought it was
for
low.
Yes, that sounds way low.
Billion, I
bet you somebody did bad math. Apple alone
No,
yesterday.
they must have Intel in there, and they took out NVIDIA.
Yeah, no, that probably was.
No,
I'm gonna go. I'm gonna check those numbers.
Yeah,
but back to TJX and Target. I mean, TJX. I always like to point out to people is twice the size of Target market cap wise, even more. Well, it's such a big company, quiet company. We don't talk about it as much.
It's the least promotional. I asked him to come on, but I gave up. I gave up asking him to come on. I didn't get anyone to come on. I mean, literally.
For those of y'all joining this morning, it looks like we might have hit the top. Pre-market so far, we have a nice bearish engulfing candle on ES. Slightly little retracement on the 9 a.m. Candle. So I'm looking for possibly maybe a pop to 45.28, maybe 45.29 to short one contract. And if we get a break of 45.14, I will look to add to that contract and possibly target 44.83 area to 44.72 area. Last time we had a bearish engulfing candle in the morning. We ended up having some nice follow through. So if I don't get the pop to scale in, I'll take a short at 45.14, the break of 45.14 with a 5-point stop loss. So if I enter at 45.14, my stop loss is going to be 45.19, 45.20.
Hence the margin that we just discussed, and they continue to. But
Yep, it's definitely a wick at the top. So we've had a wick at the top, but beautiful bearish engulfing candle is what I'm really liking. And I would love to see at least an undo of half of the move, but we'll see what happens at 4,500. If we can get a break and close below 4,500, the much better we're going to be for a downside move.
Now there is, I'm not saying that there is no shrink, okay? Because the benefits are partially offset by higher inventory shrink, so he does mention that. But I think that they have the biggest problem that Target has.
Hey, good morning.
Walmart looks real good.
Yeah, we're going to find out.
So good.
We'll find out how good in a little bit.
They need that more sporting goods.
There is a story on the tape this morning that some of these retailers, including Costco, Target, others, are rethinking self-checkout because that is a source of shrink.
That is just self-checkout, the best piece ever of all. You have to look, David, one of the things that you taught me, look at all sorts of publications.
Thank you.
Times when we get disaster. Yes. Atlantic had a piece about the disaster that is self-checkout. And Costco talked about how, like, people have watermelons underneath the cart and they forget to check out.
The fact that people are once again replacing the machines.
Well, it's easy. I was trying a haircut yesterday, Maddie. Yeah, well, I said, it's good to see you. I walked out. I said, shoot, I didn't pay him. That is what self-checkout is. And by the way, your CBS, your self-checkout.
So, and for anyone that trades equities, definitely be on the lookout for a retracement from Tesla all the way to Amazon, Tesla, Nvidia, Apple, Meta, Microsoft, AMD, Netflix, Amazon, all looking like they're going to do a pretty decent pullback. Where we at? Keep an eye on Tesla. If Tesla gets below 238, you could see a possible drop down to 230, 231. Nvidia as well. Nvidia, if we get a close on Nvidia below 4898, we could see a movement back down to 490, maybe lower. Apple, we're looking at possibly 485. Microsoft, we're looking at possible movement down to 331. That was Meta. Microsoft, yeah, we're looking at possibly 367. AMD, we're looking at a movement possibly down to 118, 116 area. Oh, okay, come on.
As well. And they've talked to Bob Iger, Mason Morford, who runs ValueAct, has been in constant discussion, not constant, has been in discussion with Iger, is supportive of the current strategy. And in fact, they've known each other for years. Morford, they've done some media stuff in the past. Obviously, Jeff Oven, who I know quite well, who used to run this firm, founded this firm, was on the Fox board. New York Times is another name they did. Spotify.
Jesus wins. The Times has some great numbers.
Remind people, they came in Salesforce ValueAct, remember, and sort of acted as kind of almost the peacemaker with all the other activists, and then Mason went on the board. Now, unclear to me whether, in fact, that would actually occur here, but you can't dismiss that as a possibility, and it would almost be used to blunt any opportunity that they might see in terms of pelts by saying, hey, we're putting this guy on the board. He's got some of the background we're looking for. They are an activist. But again, sort of broadly speaking, that's a definition there that is not necessarily the same in terms of how it applies. My understanding is, listen, they like the theme parks business, as you might imagine, in terms of the cash that it's providing.
What was that?
10 billion of profits from parks. The trade wars resolution. They just feel like there are multiple decision points that are going to end up being positive. And as I said, this is a supportive activist at this point.
Did you read Deutsche Bank piece?
Although one that is important when it comes to succession. They have been involved previously in succession, particularly most notably at Microsoft. Of course, that worked out pretty darn well.
That's very good.
Mason was on the board there. Briefly overlapped with Hugh Johnson, I think, who is the CFO now at Disney, but also I think with their general counsel as well on that board. So we'll see how this ends up, but wanted to note it. Thanks again to Ken Sparks as well at 13G Monitor.
So for today and the rest of the week, I would like to see a lower high being formed on ES and NASDAQ. And how that would look would be something like this. So let's say we break down, come down to here, we bounce, creating a lower high, and then we continue unwinding. So a drop, possible bounce to reject 45.13 or even 45.17.19 area, creating a lower high and drop, or there's still the possibility it could come back to like 45.30 and then continue down. So
Well, they didn't put up their own money. That's who cares, Mike? What do you mean, who cares? Who cares? They're an activist.
How about this? If the stock is down big, and promoter has every reason to be agitated.
Completely true.
I mean, he's been crushed.
Completely true. And he's outsourcing the form of activism to his friend, Mr. Prince.
Outsourcing. Right. What is this, like automatic data processing or something? Outsourcing.
Anyhow,
Mark.
We've shared what we have on Value Act at this point, but they will, they're an important shareholder here. Not one of the, again, $1 billion, it's still percentage-wise, not much.
Well, look, the Deutsche Bank piece is talking about
if it is that high, I'm not sure it is.
It's talking about a term.
Yes, positive piece.
It's a very positive piece, but I think that you get these guys, the billionaire class, okay, and if they lose a lot of money after they build a lifetime of a business and then it gets turned into something that people don't think is any good, well, they get angry. There's nothing wrong with being angry when you lose billions. Even billionaires, when they lose billions, have a right to be angry. Not that Lennon did not agree with it. But
For Richard, just like us, they're angry when they lose money.
I know you're talking about Lennon. You do, sadly, you're not talking about John. Talking about Vlad.
What is to be done, David? Still the best book I've read on the revolution.
I've always pointed out Chernyshevsky wrote it before Lennon.
You know, like Chernyshevsky. Jewish general was the first to do.
I don't know anything more than that. I remember this
killed some
Russian history, I think in college. That's all I remember.
Stalin said, let's send a Jewish general into Germany.
Yesterday was Catherine of Siena, so it's our daily lesson.
Yeah, well, this is Chernyshevsky. I tried to write a biography of him. There's just not enough there. I don't speak German or Russian. But
different person we're talking about.
I'm just telling about when I was going to quit here, I was going to write a biography of I.V. Chernyshevsky. Okay?
It's not too late. It's not too late. I'll encourage you, perhaps.
And you know who I've got helping me with that? Gunnar. Gunnar from with the Warner Brothers.
Yes, we're going to talk this piece in the Times about Warner Brothers. Take a look at the pre-market here. We'll talk about the China data and, of course, President Xi on U.S. soil. We'll get to Microsoft, Affirm, NVIDIA, some calls on Raytheon and Netflix when we come back.
15 minutes to go. All right, beautiful. See, definitely should have probably taken that 26. We had the slight little retracement on the second hourly candle. Should continue. If we break below, I probably should enter here because this is looking pretty weak, but I'll do it on the Forex side. And reason I'm doing it on the Forex side is that I can add right, on the pop. And on the pop, once I add, or if it does pop and I'm able to add, I can select which contract or which position to close, which I'm not able to do that on the actual future side. So on the future side, if I add a position, so let's say I enter here and then it pops, I add, when I take profits, it'll be the first one that I added that's going to be taken off. And let's say I wanna hold that one until it's really in profits. So that's why sometimes I prefer to just take it on the forex side, because I have control as to which contracts or positions I close. I can select which position to close. Okay, I'm glad I'm waiting. Come on. All right, so we are now holding. We've had two candles close below yesterday's high. So yesterday's high is right here, 54.24. I use both. I use both MT4 and MT5. More so MT5, because in the next, probably like in the next 6 months, MT4 is gonna be pretty much obsolete. So I use both. So the trade that you heard me take, like right now, I'm taking it on MT4.
As we said, markets looking to extend yesterday's rally where we got huge outperformance, Jim, out of the Russell, out of the most short.
So when you get with firms, make sure that should I switch soon? Yeah. I would definitely say take the switch, or try to, if you're able to.
I think that what happened yesterday was, even though Mason said did well, was the data on the bear market that's lasted for a couple of years. And it's funny, people, when you talk to them, I talk to so many people because of their money, and people don't seem to realize that we have been in a bear market for a lot of different stocks that just kind of, people have given up on it, especially everything financial. I mean, I got a guy who calls me every night on KeyBank. I'm like, no, it's the same day as yesterday, I don't like KeyBank. But suddenly I'm like,
I want to see what LE and HE are doing this morning.
The headline in the Journal today is the elusive soft landing is coming into view.
yes.
We do have Costin saying 12-month target up maybe at 5-6% with dividends. Just stay invested is what.
No, Costin's he's
About to throw HG back on
I say put your trade
back on the watch list too.
in the upright position, because we are about to land on PAL Airlines, and there is no foam on that runway. You don't need it.
None. Just
No,
a nice,
you'll be on the jetway
nice,
soon. What do you
easy
think?
landing.
You think you'll
Barely
thank PAL?
notice.
You think you'll thank PAL?
Barely hear the wheels coming down.
Exactly right. There's not a single. I've got 4,000 pieces here, and not a single word about what great job PAL did. It's almost as if the algorithms did a great job.
I think everybody's afraid to ring the bell yet and say we're done.
Well, it's like if you ring,
There
if
we
you say
go.
something good
There
about
we
it before
go.
it comes out.
Let's go. Let's go.
I keep trying to get you to go to the Zazzle piece. Told you to read it because you had read it.
Why would I read this? I lived it.
11 minutes to go.
Just, I mean, my God, how many words? How many words on the media business?
I had to read it.
I got the words a day.
Some implications about what they do about basketball, what they do
What is
about
this
leverage.
about?
Basketball, John Malone told me last week. Like, they can't pay for it. They need tech. Like, done. All right.
Case settled then, I guess.
That's what he said. It's like,
Look,
it's really hard.
I went back over because I got a 12 o'clock call being blatantly promotional for the best club.
Yeah.
I went back over the Amazon call.
Yes.
And there's this moment where Jassy, who's just a giant sports fan, just Brian Osofsky, the CFO, it's giant sport fans.
Yeah.
They talk about the NFL, right?
Right.
I mean, I think there isn't a live sport that they don't want. And then, understandably, David, do you think that Eddie Q doesn't want every single live sport after that coup for Major League Soccer?
I don't know, Jim. I'll defer to you on that. I will say that here on the whole back to Disney for a second, the whole ESPN partnership thing, those are not the names I'm hearing. You know, I hear,
No, they're not.
I hear Verizon, I hear NFL and NBA. Frankly, I scratch my head on all of them.
head scratchers. But I hear also that Apple's in the mix.
I don't.
No, I know. I mean, Apple, where what? If Apple has these
All
servers
right.
now,
It's definitely looking like it's gonna drop right from the open.
expansion is good to hear.
RSI's weak, stochastics weak.
Oh, you mean? No, we have the interest rates are not great today. The Magnificent Seven. We had a note today about someone trimming Nvidia because it's up so much. I think we're probably in a trim day, perhaps.
Although the Goldman desk yesterday said, all right, NVIDIA up nearly 20% in 10 days. Look, over the past 5 years, that's not that abnormal.
No, Nvidia has. If you look back, you'll see. The reason I fell in love with Nvidia and named my dog after it was that if you look back, after every couple of years, you look back what it was trading at. It was trading 16 times earnings. You thought it was at 180 times earnings. That's just Jensen Wong is. He cares tremendously about earnings per share and about growth. That doesn't. I don't mean to. I don't want to sound facetious, but you talk to Elon Musk. He cares about taking over the world. Tim Cook wants to offer the single best technology there's imaginable. Amazon wants to have the greatest revenues. Microsoft wants all right.
And we're going to get Ignite. We're going to get Nadella's keynote today.
And it's going to be amazing. It'll be amazing because he's got actual artificial intelligence products that work. But who's behind it? It's all NVIDIA. And this Grace Hopper, this H200, I mean, that is what, I mean, she's coming hat in hand, hoping for Grace Hopper. And he ain't going to get it.
Sweet. Okay, EU. Okay, GU and EU dropping. Let's go.
Yeah, there's no way giving that to China, letting China have that.
No, that's like, to me, it's like giving away the H-bomb. I don't mean that, I understand. I'm just saying that it's covered.
Yes.
I don't want to think. Yeah, we're not going nuclear.
No.
Okay? Never.
No. Good move.
Universal picture. We'll get Kramer's Mad Dash, countdown to the opening bell. Take a look at futures here. If we do get to 45.13, that will be a full 10% off the October lows. We'll watch it when we get the opening bell in a few minutes. yesterday. Here come some of the upgrades. B of A ups American Eagle, and JP Morgan ups.
All right, 5 minutes to go. 5 minutes to go.
I know you're not supposed to talk during this block because it's just be that, but I
Little
pay the precision. Sorry.
Matt Boss goes to neutral, goes from 15 to 19. We'll see how much of this holds when we get the opening bell in 5 minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Three minutes to go. 3 minutes to go. Let's go. Let's see. We got a Fed speaker in 2 minutes. Please say something to drop this hope. Trying to see. Then we have another Fed speaker 6 hours away. Tomorrow. Initial jobless claim. Continuous jobless claim. Philadelphia Fed manufacturing. Another Fed speaker tomorrow. Come on, who's Fed Weller speaks tomorrow as well. Fed Williams. Jeez, Weller speaks tomorrow as well. Yeah, so one of them is gonna say something to dump this. So just gotta ride this out. Less than 2 minutes to go. What's good? Facts. As whoever has the patience and hasn't over leveraged can pretty much ride it out. Less than a minute to go.
Let's get to a mad dash before we get you an opening bell. You want to talk a little RTX?
Monster piece today by Redburn Atlantic called RTX Grounded. Now, this is the old Raytheon Technologies, Greg Hayes. And it talks about how many problems it's going to have with GTF, which is their special engine, which they say geared and good, but grounded. I take issue with this whole piece.
You do. That's a long piece there.
Well, it's as long as they maybe risk one, more unexpected losses. Greg Hayes point blank told me that's not going to happen. I think he's a man of his word.
15 seconds. Let's
It's
go.
almost impossible to lose share given how extensive you are integrated into an airplane. Risk three, entry into service of the Advantage, the chip that is could possibly be, but that's just a risk of innovation. So I would take the other side of the RTX because I think that Greg Hayes is a man of his word. I think he's going to be able to contain the losses. Don't forget, military is very strong for them.
Don't imagine how many man hours went into this, and it took you 40 seconds to basically say, don't listen to it.
Hop on the S to 25.
I like War and Peace. Shot that thing down. I scarfed that one. I mean, look, you either believe Greg Hayes when he says that it's under control or you don't.
Waiting. Dow's popping.
Yeah, you got a list of names that came public all kind of around the same period that you think are survivors. Yes, I think
So NQ's pulling. Who is the
Jason Robinson, what he's doing, he's carpet bombing everybody with the, you get $150 if you open it. You know, David, do you have an account? You get $150 right now if you open it. I mean, it's like, remember you used to get a toaster when you opened a Tennessee?
Or your local
You
savings.
can't gamble with a toaster.
Yeah.
There's a real takeaway for today's show.
That is quite a chart.
Yeah, I mean, year to date, that is looking at video like even games.
Jason.
Yeah, I'm not gonna mess with ZL. I'm gonna leave her alone.
If you think you're playing against the man, go play against somebody else. I played against Jason. I beat him. And I do DFS. I pay like $5 and I just watch him. And just it's glorious. I put $5 down. I made $94.
Yeah.
David, how many stocks can you say about that you DraftKings is the king? I know there's lots.
I had not realized.
Not trusting this. Come on. Almost at 28.
remember that it was a SPAC.
Do you
Yes,
know
and I
how few
remember what was
SPACs
behind the SPAC.
are any good?
It was one of the few true success stories in SPAC land.
And that was because the technology is amazing. It's just such an easy site to use. And by the way, you don't gamble. You gamble responsibly just for the fact that it makes it really hard to gamble. But I'm a big believer. I live in Jersey, so you can just gamble.
With pop, so a bit of divergence. Dow's popped back up, created a lower high. Nasdaq is still looking to drop. ES is slight pop, but still holding.
You go short duration.
Let's see if it rejects.
3 years, you're still down. What? On DraftKings, down in 3 years. If you held it for 3 years.
I mean,
Nasdaq's pulling.
Sorry, David. That's what I'm here for.
David, have a cookie.
Have a cookie.
Yeah, be happy. Just can't be happy.
Guys, I'll spend the rest of the hour reading this story in the New York Times about.
I just cut to the page where he says he's got great assets.
He's undeterred. He laid off
Just cut
thousands
to
of
the page. He's
people.
got the great assets.
What else do you want to talk about?
I have so many things to talk about.
I know there are. So,
Okay, so let's just go there. Let's talk about when you get a turn.
yes, that's
Let's see if 45.28 rejects. Come on.
Now, this VF Corp Dave's the worst performer in like the history of the Western world, all right? And by the way, the previous CEO, I'm not
Back at it.
I've been into came in this temporary clause. Previous CEO, I'm not going to mention because I'm a really nice fella. But this stock, if you look at, you want to see a stock, give me a 5-year chart. You're going to see the destruction of capital like you wouldn't see. Other than when Lem takes all the money and puts it in the chimney.
Yeah, that's this. We mentioned this in the cluster.
Look at that.
Down last 24 months, down 80% versus S&P down
Bruh,
5.
yeah.
Vance, okay, Vance, you got up on one.
Just on something else.
Yeah, I mean, that's terrible. So he has come in, he stepped in from being very
Tesla's
successful.
up, Nvidia's up, everything's up except AMD.
That's how you bet on door the CEO for us. And I think he can turn around. I had him on, I couldn't believe the guy came on, Carl, with the quarter. Who comes on after a horrendous quarter and lays out a plan?
Ugh.
Backing down does. And I know that it's really hard to turn.
Gone.
By the way, never really turned, but Brown Florence was so much better than the stock is. But I will tell you that they have brands at VF that he can ignite. Turning around a sneaker company is very, very hard. But New Balance has turned all those things.
Look at TJX Apparel up 7. Home up 9.
Home Goods is so good. And by the way, if you haven't bought your Thanksgiving stuff at Home Goods, forget it. It's gone. It's gone. But this stock always does this. People freak out. They say, okay, what's the matter? Oh, it's the extra week. Oh, it's a conservative guide. Just 4 days from now, buy it. 4 days. I know.
You think Walmart's 4 days?
Sorry.
No, I was
Well,
gonna
that's
say,
how long it's like. As I said, it's like migraine.
Is that 4 trading days? Does that include weekend? Just want to make sure.
what if one day's a holiday?
4 days?
Now you
Mhm.
you come in the quick. No, I'm just saying that there is a.
Okay,
It's kind of like
okay.
the pause
Nice
that refreshes.
rejection on
Look, can we have a TJ
Dow
chart so you can see what every
Jones.
quarter it's like this? And will you look at that?
Says it all right.
And then we just need to see Nvidia's chart too, because I need the high of
Decisions,
NVIDIA.
decisions.
Just give me the high. This is the kind of natural high that they're never going to do a movie. They're never going to do a series on Netflix.
If the Dow can turn
It's an endorphin rush just looking at the
negative, or at least get back below this area right here.
Yeah, tryptophan.
Let me set an alert.
That thing. It's going to take out 500. But no, someone has to trim it. Some buzzkill like Faber.
Right or below. Oh, there we go. Damn. Okay. ES, beautiful. Okay, this is good. This is good.
That's a great firm into it.
They name a lot of new executives. They sort of put in their whole new management team, it looks like. Senior leadership changes, underscoring their commitment to building a high-performing organization. Isabel Cruz, Chief People Officer, Michelle Gill, a lot of people joining their
And the CFO. They have a new CFO.
Yeah.
I'm gonna set a limit order at 45.29.
See the new CFO at Advanced Auto Parts? That was kind of.
I did not see the
That was done
CFO.
They cut
On
the
ES,
full-year
yeah.
guide from 450 to 510 to 140
Yeah.
to 180.
I'm calling that shortfall.
They cut store growth forecast. They see comps flat to
Phil.
slightly down now.
Not a pre-announced. I mean, now the chart there's very. It's the inverse of Nvidia, but I thought that was astonishing, and I hate it when the CFO just kind of
Stop loss will be 5 points, but I'll take what I can take from it when I can.
It's not usually a good sign when they're there one day and gone the next.
It's not.
Jim, what do you think's going on with some of these locals voting against, in GM's case, this tentative?
I think it's much to do about nothing. I really don't think it'll.
Nope,
matter.
nope. I'm looking for shorts.
I mean,
So I just took a quick $100 scalp on ES.
I'm gonna do a little remonstration about owning Ford, and we did sell some higher, but Ford is the one that's come through this the best. Ford has a lot of cash.
It might pop to 45.33.
I was out and rode a cruise.
It's looking
and
like
I
it.
just loved it. And it
Glad I
looks like
took
maybe
that.
was that the kind of last cruise.
You think that was the top
It's
for
like
self-driving?
it's just ship of fools.
Yeah, I mean, the suspension, some of the layoffs here, obviously, just regulatory pushback.
Okay,
Cars
45.30.
are safe, not cruise.
Disgusting.
The cruise, I just find that I have Vero Mobility on yesterday, which is a company that does a lot of safety for cars, and if everybody had a self-driving car, we'd have far fewer deaths. But
Now you sound like Musk. That robots are safer than humans.
I thought I was the inverse.
So now what I want to wait for is either I want to see a hard rejection at 45.33 or a break below a break and close below 45.19. If we can get that, then I'll look to re-enter. I still have my shorts on the Forex side.
It's going to kill us.
Oh, yes, that's true.
AI in a car.
Yeah.
But David, the dollar stores, which
that
are
will-
not target, are really on the move.
That's good to know, Jim.
Because I think what Brian Cornell was saying, which is this problem.
Target is
of the-
really on the move, up 16%.
Feeding people, it just costs so much. It costs so much. It's just amazing how much. I mean, that's why we have these fatuous individuals come and say, well, the Fed's going to start cutting. Like, they should talk to Jay. Because Jay's like thinking about when you go to Chili's, okay? Chili's is a lot more expensive than it used to be. So's Olive Garden.
So's everywhere.
Yeah.
Yes, but it's slowing. The increases are slow.
That's all it is. It's not deflation.
No, it's
just
not.
the increases are slow.
We're not going
You don't want to see deflation.
Right. You don't want deflation.
I want people to be able to go out and
Then
have a
nobody's
decent.
Mhm.
Have
We
a
end up
decent.
like Japan for 30 years.
But we're not going to have that.
No good.
But I'll
There
tell you,
you
when
go.
the GLP-1s come, look out vodka, look out bourbon.
Really?
Yeah, they just,
You don't want to drink either.
people tell me
How about wine?
That-
How about tequila?
agave spirits are exempted.
Right.
Mezcal. You actually want more mezcal.
GLP-1 equals mezcal consumption. I think that's
David,
what said.
you know Woodford Reserve? Woodford Reserve?
Great
You know Bullet?
Yeah.
That's like Jersey water and New York water. You know?
Guys, Disney shares are up 3.5%.
Well, you did that.
We brought you towards the top of the hour. The activist fund Value Act has taken for it what is one of its largest positions. Again, as we explained, very different approach than, for example, Nelson Peltz's Trump.
They come in peace?
They come in peace.
Okay.
Many conversations between Mason Morford, who runs the firm, and Bob Iger, of course, runs Disney. But there is the possibility that Morford could end up on that board. We'll see.
Do you think
Nothing says he will. They believe in the strategy. They're
There we
embracing
go.
it. They're
Ooh,
still
look
buying
at
stock,
that.
apparently.
Look at
But
that.
nonetheless worth mentioning. And they will be involved, perhaps, as a long-term shareholder in the succession plan that, while been put off, because really we thought last year, we thought now we'd be dealing with it because we won't have one more year to go.
Yes.
But of course, he has extended for a few more years.
I do think that Peltz is not happy with that board and feels that it's a bit of a rubber stamp.
Nope.
Could be interesting. Yeah, it's worth watching.
Always.
But I am stuck on retail today because I am seeing. I mentioned Ralph Lauren earlier, Patrice Levay. He had this amazing quarter, and I talked to him, and I said, "Wow, this thing's going to take off." It did nothing today because of Brian Cornell talking about people buying apparel. Look at that monster. I mean, Brian Cornell. This is the Brian Cornell day. It is. It's Brian Cornell day. It really is, and good because he has paid his dues. He has done great things. And by the way, if you ever dealt with them,
I'm still short on the Forex side. I just entered short on GBP USD.
For 3 years, look a little different, wouldn't it?
Walmart's got great, David. You go with me to Walmart. I will get you things that you will love it.
There you go.
But I did go to Goldman my first day in a Kmart suit.
Let's go.
And they sent me home.
Please give us a solid break.
We've got new viewers.
Please give us a solid break.
He's Mr. CEO.
Going to join us very shortly. CEO of Motorola.
So great when he was on Man Money.
When was he on Man Money?
Everyone's on Man Money, David. It's like Carson.
We're meeting you work 4 days a week.
I invite them back to the cast.
Do you have
Joe Rivers is down there. Joe Rivers closed him.
your car?
What group is on the most for Letterman?
Newsletters?
No. Yeah, then I'll give you a hint.
It's like, come on, don't get me.
Yeah, Letterman liked his 90s rock.
Yeah, he sure did.
Let's check bonds before we go to break here. Still got some Fed speak to chop through today. Barr just crossed, and Barkin coming up at 3:30. Didn't quite get to 45.13, which is that 10% jump from the October lows, but not far away. Dow's up 80. Be right back.
Ooh, yes, right to it. Look at that. Marvelous. Break out, please, please, please break. Need you to break. Break these lows. Break these lows. Come on. Bruh, you don't know how ecstatic I would be if it, not even the whole thing, like just half, bro. Like, just give us back, like, just retrace halfway, right? And then a possible pop to create a lower high, bruh. That'll make this month for me. Like I have a swing, 6 mini contracts with an average cost of 44, 47. Yeah, that shit's not cool. I know we have how many days we have left until this contract expires? I think like 30 something days or 31 days. Yeah, so 30 days. So 30 more days until this contract expires. So this contract's going to expire December 15th. And I'm pretty sure between now and then we're going to end up at least getting back under 4400. So it's just patience. Yeah, so come back under there, scale out, and then reposition myself for the January contracts. Let me see. Nope, the March contracts. So yeah, so I'll reposition myself and just start scaling back in on the March contracts and and target target 41 41 and change. Ooh, that's gonna be a sweet swing. 41 and change. Let me see if I'm 44. What are we looking at? So, let me see.
Halfway through Q4, some of the big gainers on the NDX so far this quarter. There is CrowdStrike. Netflix today. B of A adds to the US1 list, Jim.
And that's a good list. CrowdStrike, I have Palo Alto on tonight, but they're neck and neck with CrowdStrike. Zscaler just always there. KLA Corp. This is KLA Corp. Now, this is the beginning of the next leg up of the
52-week high yesterday on KLA, and of course Jim will have both Palo Alto and Cisco to kick around tonight. Wow. Dow's up 76. Back after a break.
So if I scale back in, let's say 45. 45. Be sweet. In. I was looking really, really good. And Q as well. Keep it going, baby. Jones should be coming down to right lows. Okay, so where we need the Dow to break below 34,915. Let's go back to ES.
And comfort. Motorola Solutions ringing the opening bell right here at the New York Stock Exchange. The security-focused company highlighting its mission of providing safety across communities and businesses. Joining us
I want those fast thumbs, man. Don't play with me.
CEO Second time we've had you and not that long. It's good to have you back.
Thanks, David. Thank you for having
All right, what is the point of this rebranding? I mean, frankly, I know what your company does
Oh,
at this point,
there we
having
go.
focused on it a bit
There
recently.
we
Is there a
go.
sense that perhaps
Yo, look at the
investors don't
30-minute on
So I
the
think that,
on the
look,
Dow.
we split Motorola years
Beautiful
ago,
wick.
as you know.
Oh, come
We
on.
divested non-strategic businesses, exited the cell phone business, and what we did is said we're doubling down on all things public safety. The announcement this
Don't.
morning is the culmination of a multi-year journey where,
DA.
David, we have built a
Check
public
it.
safety and security ecosystem that takes
Have
public safety
your
and connects it
stop
to enterprises and businesses. So basically, it connects
and
people in
TP
need with those who can help.
and
And so we thought it was appropriate to
take
launch the new narrative.
your
Our customers sure as heck
shot.
know who we
Let's
are,
go.
and a lot of other people. But
Let's
it was
go.
an
Yes,
opportune
yes.
time
Oh,
to say, what
let's
is the
go.
new narrative of the company
Wake up.
and what do we stand
Wake
for?
up
And today
means
we
what?
announced solving
Um,
safer, because it's
wake
not
up.
static. It's
So
fluid.
it wicked
It's
up,
like
meaning
because
it
we're always
ran
innovating,
up, and
and
then
it's
it
safer
pulled
because
back. We had
it's
like a
always
massive
evolving in so many ways.
reversal
To be here.
where we create a wick. So if you look on my 15-minute time frame, this is a massive wick. Let me show you what I'm talking about on the Dow. So on the Dow Jones, let me go to the 30-minute time frame. I mean, you can see it right here on the 1 hour, but here it is. We had a bearish engulfing candle, right? So we had a 1 hour. Let me zoom in.
Safer communities, safer schools, safer
Okay,
businesses, safer
1 hour, we had a nice bearish engulfing candle. Price came right back up, right? It created a lower high because it never got above today's high. Then it started pulling back. This hourly candle hasn't closed yet. We have about 8 minutes left before it closes. But this is a nice reversal and it created a massive wick. So I mean, buys went up and then it was viciously reversed to create this wick. 30-minute time frame, you can see it right here. Beautiful wick rejection. So as long as this candle can close either green, like as long as it closes below 34,961 or even below 34,978, it's a really good sign that the Dow Jones is going to end up breaking below 3415, which is the low that I'm gauging off of this morning. So once that breaks, we could look for a nice quick slide down to 34,824 and potentially 34,700. And look at ooh, beautiful. Look at ES. Y'all see ES? Yes, yes, yes. Let's go. We are getting closer to breaking the 45.14 area. We break that. Let's go. Come on. Give us. And look at bearish engulfing candle, 1 hour time frame, and then we had a little retracement halfway, right, which was where I signaled an entry at 45.29, but I'm still holding my forex side, and let's go. Once we break here, any retest, any candles on a 15-minute, 30-minute, 5-minute time frame that pops to retest 45.14, once 45.14 is broken, will be a add or a short. Let's go. NASDAQ, keep it going, baby.
If David Faber calls with an emergency speaking Spanish and you're the dispatcher, you don't.
Yeah, she playing, man. She playing. The Dow still hasn't broken the lows yet. So and Nas, I would love to see a green to red move. Even Nasdaq hasn't quite taken out the lows yet. It's not far from it. Yeah, but that 1 hour candle on the Nas, beautiful reversal candle, and again a bearish engulfing candle. All right, and a bearish engulfing candle and a bullish engulfing candle just means that the body of that hourly candle or 30-minute candle or 15-minute candle, it ate up several or at least one previous green candle or red candle. All right, come on, follow through, baby, follow through for me.
Translating it and populating the information quicker. If you get the information quicker, respond faster.
I'm adding to my Dow Jones short.
Oh, that's great. Yeah. Greg, you know, in the brief time we have
Let's
left,
go.
you've been at the helm of this company last 16 years, you transformed it.
So I have 2 positions short on the Dow Jones. I'm looking for the Dow Jones to break this level right here. All these candles beautifully have closed above yesterday's high, which is a really good sign. Come on, follow through, baby.
Advice you give to those who are in a leadership position at this point?
So, and you know this, right? Carl Icahn, multiple years in the firm, representation in the boardroom, Jeff Ubben at Value Act. Did I think it was easy? Hell no. Did it make me a better CEO? Yeah. Did it make management better? Yes. Did it make board governance better? Yes, it did. So the advice I give is don't wait until somebody comes into your company.
Short, long,
Where's
short,
the underbelly of your
long.
weakness? Is it products? Is it cost structure? Is it management? Is it board governance? Is it capital allocation? Management knows what you're doing well and what you're not doing well. The advice is be candid for what you're not doing well and act now, because if you don't, someone else will come in and will help you.
Well, Greg, we always appreciate you taking a little time with us. Thank you.
Love seeing you guys.
Fantastic.
Thank you. Thanks for having me.
Great stuff.
Jim, what's on Matt tonight?
From Palo Alto Networks, and of course,
Nasdaq's gonna do it. Nasdaq's gonna do it. Nasdaq gonna do it. My TP on GU and EU is almost hitting, and this is a good sign because as GBP USD comes down, as Euro USD comes down, that means the dollar is strong. If the dollar is strong, the market will come down. Let's go. Beautiful.
Maybe retirement, you know, maybe after never leave. You never know. Oh, anytime you want it. You'd be great. We love you.
Absolutely. We'll take a break. Dow's up 82. Some of the gains here a little restricted by yields, which are sticky. 10-year still 4.53. Back in a moment.
Go, go, go. Yes. Beautiful. I just want you to know you're my favorite. Do 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 do. Just break down already.
Stock Exchange. Sarah Eisen is live at the Bellagio in Las Vegas ahead of a big Formula One race this weekend. Meantime, Bulls trying to hold some levels above 4,500 still. Dow's at 90. Treasuries, though, elevated still. 10 years still around 453. So he works 30 minutes in. Target of double digits after a 36% jump in profit. Advanced Auto Parts, a surprise loss and cutting its full year outlook. TJX also beats estimates. And Disney is the best stock in the Dow. Value Act building a stake. A lot more on that. It's coming up.
All right, we've got some economic data as well crossing the tape. And for that, we'll get over to Rick Santelli. Good morning, Rick.
Good morning, Dave. The month of September expected to be up 0.4%. Deliver exactly up 0.4%. And just to put some context around that, those levels represent the highest month-over-month change in inventories going all the way back to August of last year. These back-to-back up 0.4%. So building inventories is a good thing. Think holidays around the corner. Now the question is, what types of demand will we see? Interest rates, a bit of a reversal from yesterday. We purportedly had pretty good news on PPI and weaker than expected retail sales, although last month was strong. We are almost 10 basis points off the low yields today in 10s. Pay particularly close attention to yesterday's low yield, which was around 461 or 462. That'll be a key level to test. David and the gang, back to you.
All right, I'll take it. Rick Santelli. Rick, thank you. Well, I am here in Las Vegas, Nevada at the Bellagio Hotel. Why? Well, I'm actually, you can see behind me, they set up a grandstand viewing seats in the middle of the famous Bellagio fountains. It just shows how all in these casinos and this town is around the F1 race this weekend. Costs about $12,000 for the practice round, the qualifying round, and the race if you want to sit in the Bellagio club behind me. But this is going to be quite a spectacle, guys. It's supposed to bring in $1.3 billion into the Las Vegas economy, more than 100,000 people each day over the race weekend, and businesses big and small. Just for Las Vegas, we've seen new sponsors sign up for F1, including American Express and T-Mobile, which is another reason we're here. We're also previewing my documentary, which
NASDAQ
comes
is
out
getting closer
Thursday
to
night,
breaking
tomorrow
that
night,
low.
8 p.m. Eastern on CNBC. It's called Inside Track, the business of Formula One. I have spent the last few months taking a look at everything to how parent company Liberty Media has transformed this business to where the next leg of growth comes from, to all the companies that are involved. So I'm really excited for you to see that, and I'll be here for the next few days to help share some of the setup of what's going on here, which is a huge event already starting behind me. The strip is already closed, and they're going to race right in the middle of it. But guys, I do think we need to talk about the economy and the markets after yesterday's blockbuster rally and the fact that it's following through today with the Dow up 80 points. We did get a lot of economic data to chew on. PPI, wholesale prices, and then retail sales. And David, the way I would sum up both of them together, it's not too hot, not too cold economy. And I think that the market likes it. We're looking at PPI, and it was flat in the month of October. The year-over-year number goes down in the 1% range. So some really good progress. Yes, energy prices factored in here, but just another important data point on the PPI, the core gauge, which is what the Fed pays attention to, posted the smallest annual increase since the start of 2021. So David and Carl, more progress certainly on the inflation front.
Sarah, is it too early to say that Federal Reserve Chairman Jay Powell has engineered a soft landing?
The market is telling you that they're betting on the soft landing, because if the Fed is done raising rates, which I think was about yesterday's rally was all about, and the data looks good, then that's what a soft landing is by definition. And if we don't see any kind of big spike up in the unemployment rate, but it is soon, because every recession starts with a slowdown, right? So I don't think you can rule out the recession, but that certainly is the view of the market. The golden path, as Austin Goolsbee, the Chicago Fed president, says. And he's looking at the fact that we've seen this pretty historic drop in inflation, but it's not over yet. We're still a little bit higher than the Fed wants on the target. I was reading some of the research yesterday on the rally just because it was so big and such excitement about the fact that the Fed is done. And New Edge called it a Pfizer moment. The outside moves reminiscent of November. Remember this? November 9th, 2020, when Pfizer announced the COVID vaccine. Fed is done narrative kind of sets up something like that.
Yeah, they did make that that comparison to the Pfizer date, which we all remember. They suggest it means another maybe 5% upside, 4,500 or 4,700 by the end of the year. I guess the discussion, Sarah, is now leading us to, can you get further inflation progress or disinflation progress without damaging the labor market? I mean, do we start to cut into muscle there?
That's the question, and then we start coming into the question of when they're going to cut rates. If we do see further weakness in the economy and they feel confident that inflation is going to return back down to their target, the expectation the market has is that we could see rate cuts starting. There's an 80% chance now in May, and that we're going to get a bunch of rate cuts before year end. I think the Fed is going to push hard against that because they want to be sure that inflation is coming back all the way down to the 2% level. And then we're just going to watch the data. We got retail sales today. I think the headline there, weaker in October, but stronger in the prior months. And it shows that the consumer is still pretty resilient. It was a weaker number, but better than expected in October. And it also shows the prioritization of spending on healthcare services and food and beverages, while weakness in apparel and electronics and sort of the goods spending. It's something we got in the Target report today as well, and I know Target is up double digits on the profit beat, but I did talk to Target CFO Michael Fidelki about this report, and I asked him about what he's seeing in terms of consumer spending. Here's what he said. He said, and this was encouraging, I thought, a modest improvement, that was his words, in discretionary trends. They were stronger this quarter in Q3 than they were in Q2. Apparel and home were better, according to the Target CFO, but we are remaining cautious in the short term. They still saw comp store sales down almost 5%. He said the quarter overall played out as expected on the top line, but the big headline, as you know, guys, is the progress on profitability, more than 30% ahead of last year on earnings, which he attributed to the cleaner inventories, which were down 14%, efficiencies in the business, and then macro factors like freight costs normalizing, all helping with the profitability picture. But it's still, under pressure when it comes to the top line, and consumers are still looking for value, which is why I think TJX is doing so well.
Yeah, TJX, as we point out always, is also so much larger in market cap than its Target. But they are moving in different directions today in terms of the stocks. As we see Target shares up over 17%. Again, TJX, though, still maintains a more than $100 billion market.
The setup is important.
Yep, setup's important. Let's, speaking of setting up, let's get to TD Cowen's Oliver Chen, because we want to talk a bit more about Target. He has a price target of 161 outperform rating on the stock. Oliver, I mean, traffic declined, but investors don't seem particularly concerned with that, perhaps more taken with that margin number that fueled a far higher earnings per share and earnings number than had been anticipated. Are investors getting it right, in your opinion?
Yeah, there's a couple things, David. Great being here. The top line was better than feared. So comps came in at negative 4.9. Wall Street was looking for negative 5.3. Also, David, the second point, SG&A, those margins were better. That led to upside. Sarah's right. Expectations were fairly low coming into this quarter. The PE multiple was about 12 times. That's in contrast to Walmart at 24 times. Overall, lots of caution still, but the stock had been under so much pressure, and these better than feared results are part of what moved the stock higher this morning.
Is this, I mean, you mentioned, of course, being under pressure. That's been the case for quite some time, and it's been any number of different stories, whether it's boycotts related to LGBTQ, whether it's shrink, particularly theft, and on from there. Is this the beginning of a new and more positive story for Target?
Well, we hope so. However, consumer discretionary at large is under pressure. And keep in mind, Target's about 20% food, Walmart's 60%, the number one grocer. Food, essentials, beauty has been working very well. On the other hand, apparel, home, hard lines, that's about a third of the business at Target. That's been running down high single digits. And inflation is really weighing on consumers. In addition, student loan repayments are a key factor. Some of the offsets are there are $700 billion of savings on the sidelines with consumers. Also, unemployment is low at 3.9%. Furthermore, there's still nominal wage growth, which is running at 5%, and inflation's running closer to 4%. So there's puts and takes, and Target called it a consumer tug of war. I think that's what's happening in terms of a consumer that wants joy and emotion However, this consumer is
Yeah.
experiencing a fair amount of pain with inflation and being very
It's like we
considered
just
in how
can't
they
get
think
this
about
massive
purchases.
dump. Like, where was that
We
energy?
see a consumer that's
Let
very
me
focused
see
on
what time
needs
this Fed
versus
is
wants,
speaking.
needing tons of newness, needing promotions. Our top ideas are
Okay,
both.
so in 18 minutes we have natural gas
So Oliver and Sarah, how
inventory.
does it set up Target for the holiday season? When I was talking
Alright,
to
so
Michael Fidelki,
5
the CFO,
hours.
he was emphasizing that Target is embracing newness. Even though, you know, inventory is coming down, they're really investing. Fenty by Rihanna, they now carry the beauty products, which are really doing well. Just as an example. And I wonder if that's enough to move the needle for them in what appears to be a pretty tough macroeconomic environment for holiday spending for a company like Target.
Yeah, you're right, Sarah. I mean, we're excited about Barbie, Legos, Pokemon,
Bruh.
and beauty. Beauty continues to work. The consumer does
I
put
know,
beauty
I
almost as
know.
an essential in terms of that being so important for self-care. The other thing that's happening at
Nice.
Target, a lot of focus on the conference call was on opening price points and value.
Just patiently
Value
waiting.
will be a key theme in making sure you have low accessible price points. This will be a great gifting season, but unfortunately, we've had warmer weather, we've had volatile store traffic, and we've had a high degree of promotions. Promotions are still under control,
60,
but
yeah,
that's
dropped the
really
full
something
point.
to watch. Apparel is a watch out category, especially because it's been warmer. We're hopeful for toys, and we're also hopeful that Target is really
I let it
indexing
keep that
into these
energy,
everyday low
repeat the
prices,
process
low
tomorrow.
access price points, and promotions to drive a holiday. But it'll be pretty choppy.
Oliver, we're going to leave it there for today. I always appreciate your taking some time. Thank you.
Our pleasure. Happy holidays.
And to you.
I just want one and
I
out.
want to move quickly on to Disney, shares of
Sir.
which are up about 3%, have been up as much as 3.5%. This on news that, well, in part at least, that we brought you towards the top of the 9 o'clock hour, with as well help from Ken Squire, 13D Monitor, and his activist spotlight on CNBC.com. Value Act, a large activist investor, though typically a bit different in terms of playbook than some of the other brand name activists, has taken what for it is one of its larger positions in Disney. Again, that doesn't necessarily mean that it is an enormous position, but it could be, and this is guessing, perhaps approaching $1 billion at some point. They started buying this summer. They continue to buy, is our understanding as well. And they're attracted to the company in part because of its theme park business, delivering over $10 billion in profits, and what they believe is an undervalued asset within it. The fact that streaming has come a long way and ultimately is nearing, let's call it, a resolution of its lack of profitability. And ultimately, that Bob Iger is following a playbook which is going to result in a higher stock price over time. They've engaged with management, is our understanding. Mason Morford, who runs Value Act, has known Iger for quite some time. It's my understanding they've had plenty of conversations. Value Act itself has been at least involved in a number of other media companies, though not, well, Fox at one point. Jeff Ubben, who ran the firm, was on the board there. New York Times, Spotify. Unclear whether a board seat is in any way in the future. But again, this is sort of more, let's call it, under the friendly activist headline as opposed to what you're seeing from Nelson Peltz. And one question, of course, is there a way you could blunt Peltz by putting perhaps Mason Morford on the board again? That's simply sort of conjecture at this point, but something that you could at least consider as a possibility. Succession, also something they've been quite involved with at Value Act in the past. Key being their presence on the Microsoft board when they chose Satya Nadella to run that company. Good choice there. And at some point, of course, a decision is going to have to be made in terms of Iger's replacement yet again. But you can see what's happening to those shares. Sarah, I'll send it back over to you in Las Vegas.
Yeah. All right. Thank you, David. Coming up here on Squawk on the Street, live from Las Vegas. After the break, I'll speak with Greg Maffei. He is the CEO of Liberty Media, which owns Formula One, about why they are making such a big bet financially on the Las Vegas Grand Prix this weekend. Big show still to come. Don't go anywhere.
Right back up. Ridiculous. Ridiculous. Okay, another rejection looking like a lower high on a 5-minute time frame.
Welcome back to Squawk on the Street. I am live in Las Vegas for the Grand Prix Formula One race coming this weekend ahead of our new CNBC documentary, Inside Track, The Business of Formula One, which premieres tomorrow night at 8 p.m. on CNBC. Here's a look at what to expect. Team bosses say the cost cap, which limits what they can spend on building and developing their cars, has also made their finances more predictable.
Before, somebody investing in a race team didn't know if he would spend 200 million a year or $500 million a year. There was everything in between.
Financial stability, in turn, has helped drive a surge in the value of the teams.
When we got involved, literally the bottom teams were being traded for zero. Today, I don't think you could buy a team for less than $750 million, and the top teams are valued $3 billion. That's a total change.
Joining me now here at the Bellagio is that man, Greg Maffei, Liberty Media President and CEO. Liberty Media owns stakes in SiriusXM, Live Nation, Atlanta Braves, and owns Formula One. It is good to see you.
Thank you, sir, for having me.
No, not yet. I gotta get a couple attachments for it.
Became involved with Formula One 7 years ago, and even before we were involved, we had the dream of Vegas. We knew that it was the paragon of bringing sports in the United States and raising the profile of Formula One in the United States, and we thought nothing could be more exciting than a race down the strip.
Hence the very large investment you are making. You bought land, you built buildings. Yeah. I mean, it's different than other races where you partner with a sponsor. You're putting on this yourself. So how,
but it's like
talk about the cost
like, and it comes with a carry case,
well, you're
like
right.
pouch.
We changed the model. It used to be
it comes
with that. Sort of came to town in F1,
I don't know, but I might try to see if I can get something that's like a little bit more wider, because like the screen is like it's very slim, so I want like at least something that's a little bit more wider for like screen real estate.
It is an unusual model, and we're both, as you noted, spent a large amount of money buying the land, 40 acres over there, and then investing to build what is the largest paddock and the largest pits in the whole Formula One among circuits. So we're very excited.
What is the importance of the Las Vegas Grand Prix to the growth of the sport in the United States? We've already seen a nice spurt coming out of Drive to Survive.
Right.
Now what?
Well, I think we're going to, continue to see growth, and that's our goal.
Yeah.
And you have to.
I like the one that you have, like, because you just attach it, like, with an HDMI, you just attach it to the side and stuff like that. This one, like, I need like a USB-C converter. So I need a USB-C converter to HDMI converter.
We think we're
because on my and I also gotta get like a HDMI splitter. So it's just like I gotta get a few other stuff where it's just like your screen, I believe, like it's either just HDMI or whatever, you just connect it to the
I think it's interesting that Vegas has already, as a race itself, brought in new sponsors like Airlines. How
this
much room
one's
is
like
there for that?
it's like 4 cables, bro. I'm gonna need a USB-C to HDMI, and then I'm gonna need a HDMI splitter because it's two sides.
New sponsors like Amex and T-Mo who've joined just because of Vegas, and I think that opportunity to grow that kind of interest, particularly among strong U.S. and tech companies, is huge. You're right. We have only so much paint. But we look for new ways to activate, new ways to bring sponsors in, and frankly, the teams have done a great job doing that as well.
Damn, there was one that I saw. There was one that I saw on TikTok that was pretty solid for like for monitors and for like laptops. Like it's very sturdy and it has like suction cups on the bottom. So like once you place it into a spot, it doesn't move, and then you can just move the part that holds the screen of the laptop around.
Well, look, I think the NFL obviously has done an amazing job in the United States, and there's so much to learn. But some of the things like a cost cap, some of the things like trying to think about how the NFL is so much stronger because the league is strong with centralized revenues. Play hard on Sunday, all together on Monday, trying to build that mentality. We have a lot of differences from the NFL, but we also have a lot of advantage over the NFL. No sport is more global, and the NFL still is a U.S.-driven sport. We have the advantage of global. We have the advantage of attracting an enormous female audience. So there are things we're trying to capitalize on, and we hope Vegas is a part of it.
Now, let's talk about the female audience and the demographics and how they're changing and where that growth is really coming from.
Yeah. So over the last 4 years, a recent study showed we've taken the average age down 4 years, and 40% of the new fans are female.
Here it comes.
Why? There are no female drivers. There are very few females on the grid at all. Engineers, in the garages.
A couple of points to make there. First, I think we have an attractive product and some handsome young men who are doing exciting things.
I agree.
But in addition, we have a sport which is really going to be built on women. As you know, we have F1 Academy, which is bringing young girls in to try and give them a role to grow and be in the sport as drivers. It's being led by Susie Wolf, who was a driver, Toto's wife. We have, as you're going to interview later today, a host of women who run what is going on in Vegas and what is going
Renee
on.
Wilm coming up next hour. She's
Yeah.
the CEO of Las Vegas Grand Prix.
It's done an unbelievable job. And, you know, I had to laugh. Somebody pointed out how many women there were. That's not what we sought out to do. We sought the best
You mean
people.
in executive roles?
Yeah, we have so many women in executive roles
Yeah.
at F1.
Talk
From
about
Sasha
being
Woodard
on steroids.
to Renee, to who's driving Las Vegas. And women are a huge force in this sport. And that wasn't what we did by design. It just happened. They're there.
And the other knock against F1 that you get regularly is that it's an elitist sport. I mean, this Bellagio Club, $12,000 a ticket. It's not exactly the most accessible sport to attend.
Yeah.
Is that a problem?
Look, I think
Full point
Vegas is
reversal.
going to be an expensive place. It will be the most expensive of our races. Most expensive to put on. Also the most expensive, therefore, in tickets. I think there's always room to ensure that we have
This
some
is
offering
wild.
for everybody. There are other places which are clearly more affordable. And we'll continue to look at that. There are ways to try and make sure the sport is accessible to all. And as we grow it, we need to ensure it's accessible to all.
So how will you determine the success of this weekend? Is it already a success because of all the sponsors and because Vegas has really gone all in on this? What should we look for?
Well, I think the thing that we're going to care the most is our fans going to leave on Sunday thinking, wow, that was amazing. Both fans on television and the fans that are here, we want to impress them. We want them to think there's nothing but excitement in Formula One, and it's only going to get better from here.
But how are they going to watch on television? It's 10 p.m. local, 1 a.m. Eastern time. If you're trying to cater to a U.S. audience, that's like a weird time.
Well, we have we cater to a global audience, and it's a challenge for us. You know, we have a lot of fans who have to get up at 6 a.m. to watch European races in Australia. We're a global business, and that's a great opportunity. It's also a challenge for viewing times.
My kids will watch at 6 a.m. on DVR. Thank you, Greg.
Thank you, Sarah.
Excited to be here. That is Greg Maffei, he's the CEO of Liberty Media, owner of F1. And a reminder, the CNBC documentary Inside Track, Business of Formula One debuts tomorrow at 8 p.m. And you will hear a lot more from Mr. Maffei and the growth plans ahead for Formula One. David.
Sarah, thank you. Let's talk semis for a brief moment here because they are coming off all-time highs, now up 60% this year. Number of big hedge funds, though, actually shorting or at least selling in the group. We're going to name names, take a bit of a deeper dive into those latest 13F filings. Some of the stock moves may surprise you. We're back right after this.
Looking to add to the short at what price? Currently at this moment, I'm just gonna wait. This thing could possibly take out the morning's highs. We are having that typical run before the London market closes. So I'm just gonna patiently wait. I don't want to add unless I see confirmation that we're going to continue down. Um, if price can hold, if price can hold this area right here, 34, 35, I would probably look to possibly add close to the high of the day. So either 45.41 or 45.39. I do believe that this pop is just a pop for the London market close, but let's see. Really good rejection. Oh, very nice.
Semiconductor sector continues to hit some new highs this year. You can see that right there. Several big name hedge funds, though, don't seem to think the rally will last. Christina Partsinevelos joins us now. She's right here at Post 9. What does that mean?
What does that mean, Hominus? But it has to do with the 13F filings. Let's start with Michael Burry. You remember him for calling the subprime crisis, and he was portrayed in the movie The Big Short. Well, he is betting against semiconductor stocks, according to his latest 13F filing, which is as of September 30th, so it's a little bit backwards looking. But Cyan Asset Management revealed a 100,000 share put position in the iShares Semiconductor ETF, SOX. That's his largest position. So in other words, he's betting that SOX will fall. Depending on the timing, because we don't know when he actually took that position and if he's still holding it to this day, but the SOX is up about 8% since September 30th, so he could be sitting on a loss. Burry's not alone, though, in his bet against chips. David Tepper's Appaloosa Fund also cutting its exposure. This according to their latest 13F filing. The fund completely dissolved its positions in Broadcom, Cadence Design Systems, Marvell, while trimming its positions in AMD, Intel, Qualcomm, TSMC, Taiwan Semi. And speaking of Taiwan Semiconductors, Dan Lowe's Third Point reduced its stake in TSMC by nearly 28% and also sold out of AMD, Micron, and NVIDIA. We won't know the reasoning, but chips were under a reset during Q3 and maybe slightly into October. Concerns about China demand, AI euphoria subsiding, weakness in auto industrial demand are all factors, or just some factors, weighing on the sector just a few weeks ago. But as you guys have talked about yesterday and the day before, momentum is definitely back into this sector. NVIDIA closing at an all-time high yesterday, adding $220 billion in market cap just over the last 10 days. That's like adding an entire sales force to NVIDIA. Applied Materials, Broadcom, Intel, just a few examples of chip names hitting 52-week highs. And then other catalysts, AMD guiding 2024 estimate data center GPU revenue above expectations. There's the Microsoft event today. They're making their own AI chips, so that's maybe not good for NVIDIA, but we'll see what comes out of it. AWS announcing GPU rental services and a slew of other AI chip events from Intel as well as AMD in December that would reignite this AI.
Yeah, we're going to get Ignite today in Nadella.
I know, I just used Ignite several times in that.
And we get NVIDIA on the 21st?
Next Tuesday.
Right. How much is riding on that guidance?
It's not necessarily the guidance, because we're not expecting a huge beat. Well, yeah, it is the guidance for 2024. It's really how much confidence can NVIDIA put in investors' minds that they can keep this growth momentum going? Because you saw the massive beat last quarter, the incredible beat the previous quarter. So the expectation is a little bit more tempered for this quarter in terms of beat, but it's really how are they going to keep this GPU growth going, especially when they're launching a new GPU chip on a completely different architecture next year. That could have a lot of people maybe slow down their orders until they wait for that new chip. So it's really just about building confidence into data center revenues for 2024, 2025.
So data point wise, so that's going to be the most important when we get near term.
That and then the China overhang. Let's see if they actually say anything, because China contributes about 20 to 25% of data center revenues. We know the U.S. export restrictions were put in place. The reaction was negative. And then news that they've created already 3 workaround chips to sell to China. So maybe it won't even have an impact just within the next year or so. But 2 years from now, could change.
Maybe part of something to listen for with Xi Biden this week, today. We'll see. Thanks, Christina. Thank you.
Thank you.
Let's get a news update with our Bertha Coombs. Hey, Bertha.
Hey, Carl. Welcome back.
Doesn't look like I'm gonna get it.
I'm Bertha Coombs with your CNBC News update. The Israeli military is pushing ahead with its raid of Gaza's largest hospital today. The IDF says it is operating on intelligence information that Hamas is operating inside the Al-Shifa
Well
hospital.
done, Abby. Well
Israel
done.
says soldiers have delivered supplies to the hospital, but an official from the Hamas-run Gaza Health Ministry says troops are questioning people inside and taking some away. Federal prosecutors announced charges today in a vast Russian smuggling ring. 7 people are accused of sending prohibited electronics worth millions of dollars from the U.S. to be used in making guided missiles and tanks for the war in Ukraine. And the Biden administration announced $3.5 billion today for companies that produce batteries. The effort to strengthen the supply chain that comes as the Energy Department estimates that the demand for lithium batteries will increase by up to 10 times by 2030. Lithium is the main battery type factor for electric vehicles and clean electricity storage. Carl, back up to you.
Bertha, thanks so much. Meantime, stocks are adding to yesterday's huge rally. The
Let's
S&P
see.
at more than 2-month highs. NASDAQ out of correction territory. Small caps coming off their best day in more than a year. Should you keep riding this rally into year end? We'll talk about that after a short break.
Okay, coming back up. I'm putting the 4432 back on. See if I get it. Almost getting filled. Almost. Okay, don't want to fill me. That's okay. I'll wait for the London close.
Good.
Rally tries to march on today. S&P NASDAQ coming off their best day since April, as you know, as the NASDAQ exits correction territory. Big question now, of course, is can the rally keep going? Our next guest is hesitant to take more rate hikes completely off of the table. Former Barclays CEO Bob Diamond, now CEO, founding partner of Atlas Merchant Capital, is here at Post 9. We're lucky to have you, Bob. Welcome. Good to see you.
Good to see you, Carl.
To the degree yesterday was a re-rate, was it deserved, do you think?
Yeah, I think so. I mean, I think we felt there was little chance for another raise in December. There's one more FOMC meeting this year in December. I think it completely took it off the table for now, and I think we can look toward next year. We're in a pause. You know, our sense is that the Fed is pretty pleased, given that, you know, as recently as March 22, it's hard to believe, right? 18 months ago, they were still buying 120 billion in treasuries and mortgages a month. They clearly waited too long. The first rate increase was 15 months ago, and I think it was June or July 2022. 550 basis points, unprecedented, and yet the economy is moving forward, and frankly, the bond and equity markets are kind of in balance. And I think one of the things I discovered as I was in Asia a couple of weeks ago and in the Middle East last week, and the perspective of what's happened in the U.S. In this, correction phase is like, did they really just pull this off? Did they really raise rates 550 basis points, begin taming inflation? The economy is not in recession. The markets are balanced. And I think sometimes we don't take the look that people from outside the U.S. have, which is, yes, they waited too long. Yes, we had too much stimulus. But this is a pretty good result. And I think the Fed is sitting there feeling pretty good right now. They'll definitely err on the side of waiting too long, I think, rather than getting out. So
you don't see rate hikes next year?
Boy, David, I think I hate to say anything zero, but if you go through Fed history, the barrier for them to reverse course versus pause is very, very high. So barring something systemic, I think they're going to wait quite a while before they even contemplate rate cuts. Yeah.
Meantime, Wells today, they're still pretty cautious on equities. We feel there is a significant post-QE rot in many bond portfolios, i.e. unrealized losses, which still make for an unstable foundation. Fair?
I think so. I mean, if you just look at the banks, right? We talked about SVB and the 10 years versus the deposits and the flight of deposits. The mark-to-market on the banking industry for their treasury portfolios, what was the negative mark-to-market if it went through the P&L? Was $600 billion. B of A alone was $100 billion. I think JP Morgan was 30 or 35. So you don't have 550 basis point increase in rates without having some damage in treasury portfolios because they can't be short, right? So they have to be somewhat long. We'll have to work through that. And I think it's very fair, Carl, to say that overhangs the bond markets to some extent. I don't think it's a huge barrier, but it has to be considered.
I think Sarah has a question.
Bob,
Sarah.
what about it's Sarah in Vegas. Hey, what about the overhang of just the sheer amount of treasury issuance that has to happen going into next year? I know it helps to have lower interest rates, but they're still a lot higher than they have been, and there's questions about demand and who's going to absorb all this debt.
Listen, and for all those positives we just talked about, the stimulus in the beginning of COVID was spot on, but we've had some big whiffs. The Fed waited too long, and as Stan Druckenmiller pointed out, a few weeks ago, they did nothing about extending duration, and I think that was a big whiff. So I think the dark cloud hanging over us is debt. From the time Trump took office, so 7 years, the debt's gone from 20 trillion to 34 trillion. The bill this year, I think the fiscal year ends 9/30, $570 billion in interest costs, and rates weren't all the way up. And so as we look forward, I think the big dark cloud overhanging us, Sarah, is the debt pile, and how we're gonna manage that over the next few years.
Yeah, especially with a lot of refinancing coming up of low-cost debt over the next 3 years, as you say, given the interest costs. Your firm also plays in the distressed credit part of the world. We've followed private credit to an extent here in the explosion of it. I'm just curious, given everything we've just mentioned, what your expectations are. I mean, there still does seem to be the possibility of a lot of distress coming, given that 550 basis point rise over the last 15 months.
Boy, we think so. We think cracks in credit are going to be real. You can have a positive economy, no recession, and still have a really, really serious crack in credit. I mean, we had 14 years of zero interest rates and almost free money with very, very few covenants. So our Credit Opportunity Fund, which Ty Wallach runs for us, is staying very liquid, very opportunistic. We think there's a lot of... So if you look at the SVB situation, I mean, that was an extremely well-run bank, incredible client base, incredible service. And they had one big issue, which was the treasury portfolio. And so our view is we're going to see really good companies, really good corporates that have probably not adjusted to the 5.5% interest rates as they could have, and that's going to create an issue. So we think opportunistic credit, looking for cracks in corporate credit where maybe the asset liability wasn't as managed as well as it could have been, is going to be a great opportunity.
Would you agree with the line that if you're a corporate treasurer and you haven't adjusted by now,
Little over 15 minutes before London closes.
But I think I think there's still time to do things because the economy is not in recession. So I wouldn't say it's too late, Carl, either. But clearly, action should have been taken. I mean, let's be honest. This was not a secret that the Fed was going to raise rates. It was probably the best advertised series of interest rate rises that we've ever had.
A great guidance, Bob. Good to see you. Thank you for coming in.
Good to be here.
Sarah?
When we come back, President Biden and Chinese President Xi Jinping gearing up for their high-stakes meeting later today. We're going to tell you what to expect there. And as we head to break, check out the top gainers right now on the S&P 500, which is higher overall. Targets right at the top, of 17% on that profit beat. The F Corp continues to come back strong here after a tough year, up another 14%. And Expedia is on that list as well, 7.8%. The rally continues after yesterday's big day. Squawk on the Street will be right back from Las Vegas and the New York Stock Exchange. Don't go anywhere.
Oh, it's brutal. Huh? Weekend, same thing, bro. Just gym, cardio, workout. This weekend I don't have to help my mom's with not bringing stuff to the shipping container. So I'm just gonna chill out, relax. Oh no, 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 no. I know. Is this weekend the 18th? Oh yeah. This weekend's the 18th. I have a Friendsgiving to go to and a birthday party. So yeah, that's the vibe this weekend. Yep. Yep.
Members only. Welcome back to Squawk on the Street. It's the final tournament of the season for the LPGA as the CME Group Tour Championship kicks off tomorrow. Our Dom Chu is live in Naples, Florida with a very special guest. Hey, Dom.
Good morning, Carl. It may feel like we're doing a Weather Channel hit right now, but we're in Naples, Florida. It's torrential downpours, and we're kind of see if the golf course finishes up. But I'm here with CME Group Chairman and CEO Terry Duffy. Terry, we've got some news this morning because the CME Group has just extended its sponsorship agreement with the season-ending LPGA Tour Championship until 2025. Can you take us through why the CME Group is well-positioned to stand alongside the LPGA in women's professional golf?
Yeah, many reasons that we are doing this. We think it's important to support women in sport.
So CME has been a leader in this for many, many years. You know, this helps build the brand of CME Group. I can remember sitting around many years ago, listening to Charlie Rose talk to some real luminaries in the business. And one of the things that they asked him, what could hurt your business? And it's reputational harm. And one of the things I'm very protective of reputational harm and making sure that we are out there branding our company to the best we can. And being branded with the LPGA and, of course, our charity sponsor, St. Jude Children's Research Hospital, is something we're all very proud of.
Now, this season-ending championship is going to result in the culmination of the season here. What do you think is going to be the future of golf and women's golf in general going forward?
You know, I think it's pretty hard to predict, Dom. I think we're going to have to wait to see how the men's game shakes out and see what happens there, and if there's a follow-on by the women. I actually think they'll be able to break off and do their own thing and not have to be too committed to where the men go with the LIV and the PGA Tour.
Now, speaking of uncertainty, it's great to have you here on a day when the market had a massive rally. And these days, everyone's trying to figure out what's going to happen next. You have a front row seat to volatility in the markets of the future side of things. Just take us through your perspective about what you think the markets could look like in the next 6 to 12 months.
Well, I actually think, Don, we're going to see a lot of the same what we saw last year. We're going to see continued volatility. I know everybody's really excited over yesterday when we came in with the CPI number that was at 1/10 difference in the estimates, and we get a little excited by that, which we should. That's what markets do. They anticipate where the market's going to be, what the Fed may or may not do. But you know, I didn't hear a lot of people talking about some of the geopolitical events and using those inputs going into the marketplace.
Good question.
So I still see a tremendous amount of risk out there. I mean,
as far as favorite
the Middle East, you have the uncertainty between Russia and Ukraine, and God knows what's going to happen between Chinese and the Taiwan. So it's a very interesting time right now. So I think people need to manage and mitigate that. I see a lot of the same for 2020.
I do like some was it like the sweet potato pie, pumpkin pie, but food. I guess like some nice well seasoned turkey breast with corn on the cob, collard greens, veggies.
Well, I think, yeah, one of the things I see is just, and I've said this before to Carl, and I know he's in studio, and Sarah, is when you look at the auctions, when the government's issuing debt, you know, the supply-demand issue associated with that. If, in fact, that we don't get the demand for our treasuries, we're going to have to continue to pay more for people to buy those. And I don't think people are factoring that into the equation. So I think we'll see a lot more of that pricing going on as the year goes on in 2024. So I don't
being I'm from the islands and most of my family members will cook like some seafood dishes.
Hopefully the weather cooperates in the next couple of days, but a big announcement from CME Group. Terry, thank you very much.
Tom, thanks for being here. Carl, I hope you're doing well.
All right, David, back over to you guys.
Carl's doing great. Dom, thank you. Sorry about the weather there. Quick notice, we had to break. Later today, don't miss it, we've got a CNBC exclusive with that man, Microsoft CEO Satya Nadella. He will be live from the company's annual Ignite conference. Of course, we will talk a lot, as you might imagine, about AI initiatives at Microsoft. It is, by the way, a $2,750,000,000
I used to like stuffing.
market cap company. 1 p.m. Eastern. Don't miss
But then it depends like how the people make it. Oh, and like fresh cranberry. Oh, bruh. Some nice fresh cranberry sauce, some gravy. Which island? The Cape Verdean Islands off the west coast of Africa. 10 islands colonized by the Portuguese, Dutch, and French, but mainly the Portuguese. Minutes till the London close.
President Biden and Chinese President Xi Jinping set to meet later today in San Francisco. Eamon Javers is there, and he can tell us at least what we are expecting. Eamon.
Yeah, good morning, David. President Biden landed in San Francisco late yesterday. He was greeted by local officials and headed off to a Democratic Party fundraiser last night. Chinese President Xi Jinping also landed shortly after the president, greeted by Treasury Secretary Janet Yellen, California Governor Gavin Newsom, and a military
You're still in
honor
the
guard.
ES?
One thing that is still officially a mystery, though, is where this meeting is going to actually take place. The administration is only saying it's going to happen in the San Francisco Bay Area and not offering details other than that. Officials are setting low expectations around the meeting, saying that the goal here is to show that the U.S. can have competition with China without having a confrontation with that country. And although some of the outcomes have likely been agreed to already, the key one is going to be reestablishing
Just
military
popping and dropping like a low float stock.
prevent an accidental conflict in the region. President Biden would also like China to agree to measures limiting the flow of fentanyl to the United States. And this is an opportunity on the Chinese side for China to reset global market expectations about the direction of its economy. One way China's going to do that is with a $2,000 a plate dinner tonight with what we expect will be a glittering array of American CEOs here in San Francisco, a chance for Beijing to remind Washington and the world that it has powerful friends here in the United States. We've already seen some agreements nailed down in the run-up to this meeting. The administration announced last night, for example, that U.S. climate envoy John Kerry and his counterpart have agreed to a set of climate measures, including relaunching bilateral climate talks. So all of that is to say that there has been some success in the run-up to this, but the expectations are low for what will happen in terms of concrete deliverables on the back end of this summit, guys. Back over to you.
Yeah. Eamon, you just mentioned a $2,000 a plate dinner. I'm sorry, for U.S. CEOs, and Xi Jinping is going to be there. What are they paying for? Who are they paying that money to? I'm a little confused.
Well, they're paying the money to the organizers who say that they're using those funds for security, to rent the hall, and for all of the, for all the food that everybody's going to eat tonight. They say it's just an expensive undertaking to put this on. It's the U.S. China Business Council and another organization that are sponsoring that dinner tonight. And it's so it's not a political fundraiser like you'd see in the American context, but we will see a bunch of American CEOs. No attendee list has been released publicly, but I'll be in the room tonight and I'll be keeping my eyes peeled for any familiar faces.
As you always do. Eamon, thank you, and thank you for clarifying that as well. Appreciate it. Eamon Javers.
Yep.
Meantime, a quick programming note. CNBC is launching a new cross-platform franchise called Cities of Success. We're going to feature a different city each quarter and highlight the entrepreneurial spirit that is attracting capital, companies, and employees. Our first stop is going to be Nashville, Tennessee. Do not miss our one-hour primetime Cities of Success special December 6th at 10 p.m. Eastern Time. David, kind of a cool way to look at how capital's moving away from what we consider urban hubs into a different generation of cities, as the ability of the American city to reinvent itself is pretty astounding right now.
Yeah, Nashville's a great place to start, I would assume, given all the business taking place there.
Yeah, music, healthcare, and a bunch of new industries moving in. It's going to be fun.
Great, looking forward to that. All right, we've got a documentary coming up as well tomorrow, if you haven't heard about that. Sarah is in Las Vegas, where the race will begin soon as well. What's coming up in the next hour, though, is Streets of Squawk on the Street.
Thank you, David. Well, Eamon, those CEOs that are there for the meeting with Xi Jinping, many of them will go from San Francisco here to Las Vegas for this big spectacle. As you know, businesses, big and small, have been jumping into Formula One, trying to tap into some of the growth in its demographics and its viewing, and just the spectacle that is here in Las Vegas. We're going to talk in the next hour to Renee Welm. She is the CEO of the Las Vegas Grand Prix. She is the one in charge of making this all happen. And it was not easy to build a 3.8-mile track that goes right in the middle of the Vegas Strip. They have to close it down. They have to deal with security and infrastructure. There are also some questions about ticket prices falling into the event and what demand looks like and what success will be. We're going to talk about all of that with her. And then in the next few days, I'll have live coverage from Vegas leading up to the race weekend ahead of the premiere of our documentary tomorrow night, 8 p.m. Eastern on CNBC Inside Track. Squawk on the Street continues after a quick break.
All right, ladies and gentlemen, I'm going to be calling it a day. I'm going to set my stop loss on this trade. Probably rest till about 45.38. Damn.
$1 billion of economic value expected to be brought to this city.
Huge news will be all over it, Sarah. Meantime, a softer than expected inflation print. PPI with its biggest drop since April of 2020 targets the top S&P gainer on pace.
For those of you guys that are green on a day, definitely keep that. Don't overtrade. And I'll see you guys tomorrow. Same time.
Then Microsoft unveiling its new AI chip.